You think I've never seen Star Wars? That's how we're gonna start the show. You think I've never seen Star Wars?
I
you're gonna
doubt
make
that
me get
people your
defensive
age
right
have
away? Are you
seen
kidding
Star
me?
Wars. And I mean like Star Wars, Empire, and Return of the Jedi,
I've seen
and
all
watch
those
those
like
movies
six, 7 times.
like what like just watch the crap out of them, like ruin the VHS of because you watch them so much.
This is not the millennial you're looking for. You know what I mean?
Okay,
You just
okay,
got
cool.
wrong.
Hey, great. I'm happy for you.
I had to show it to Selena like a few months ago, and she didn't realize like how good the production quality is for the 80s. She's like, "Oh, this is great."
What are you talking about? 80s, 1977.
Yeah, so even before then. See?
Yeah.
Thanks everyone for joining Money Mobsters. We are back once again after an interesting morning. Dougie, you were there this morning with Amit's new hair look, and he's our boy's making it, dude. He's on the Wall Street Journal.
Yeah. Well, he's got the look today, and so if you can pull up a pic of our boy Amit from this afternoon's earnings, all I can say is he may have gone a little too far down the Freddie Mercury rabbit hole, because he's about 2 weeks away from just like growing out the mustache and going like all 100% Freddie Mercury. But he doesn't have the overbite, so I don't know how he's gonna make it work.
Yeah, let's see. Here we are. Yep. Navigation. Booyah. And I don't know.
Look at that fit. That is Freddie Mercury's outfit right there, 100%.
I mean, I'm less concerned about, dude. The hair looks good, of course. Leather jacket. What's going on with Tanner?
Tanner is, I don't know. He thinks that's what Jensen looks like, and that's the sad thing.
Is that why he's got like the green eye paint?
Yes, and the white hair. But I'm like, Jensen has like short hair. It's not parted down the middle. I was like, Tanner looks more like an American founding father than Jensen Huang. Like a little powdered wig.
Oh, it's brutal being on the internet. And this time
we love the guys. We love the guys, right?
Like this time it's just Tanner's turn to take the punishment.
I mean, hey, right. he look, I'm fully aware, and I have a little bit of a reputation, you're aware, of a certain sartorial flair, as it were.
Extravagant dressing, yes.
Right? Yes. So I understand. Art is about choices, as is the sartorial art. And that, my friend Tanner, that was a choice you made.
Well,
but our boy Amit looking fresh.
Looking fresh,
dude, looking good.
Lined it up. And he had Hannah Lang from Wall Street Journal was covering it this morning.
Yep.
So I'm sure that was fun in the chat. I wasn't there for it, but
that was very fun. I got to ban a lot of people. I know Hannah. I've talked to her before. She interviewed me. I don't know, about 6 months ago, maybe ish. About the retirement of JPal.
Okay.
So, yeah. So like, she's really cool. Like, I really enjoyed talking to her on the phone. And the fact that she's, I guess, doing a story on Amit is awesome, because he's the best.
Looks like
he's the best reporter on the market.
There's going to be like multiple people. So I think if I heard Amit explain it correctly, there's going to be like a commodities trader. Maybe there's going to be like a swing trader. Maybe there's going to be like a value investor. Maybe there's going to be like a foreign currency person. Like, who knows what she'll do with it.
Okay. Well, all those people can put you to sleep, but
Amit will wake your ass up.
Yeah, Amit will wake your ass up.
Speaking of getting woke up, so the buying a car is an interesting experience. You got to be on your toes. Talk to me about what's going on with the Telluride that we talked about from last week.
Especially used cars. So, I mean, it's not that big a deal, okay? But rather than like finance it or anything, I was just like, I'll just use Robinhood margin loan. It's cheaper than what I could get at a bank anyway. So it's like, so then they're, you put like, basically you have an options contract to buy the car. You have to pay the premium for them to take it off the market, right? It's very much a call option on the vehicle. So put the $1,000 on the credit card or something, whatever, fine, right? But then it's like, okay, well, I'll wire you the rest, bro. That wire took like 7 days
Wow.
for the transaction, and I'm like, well, this is what crypto's for.
Yeah.
Because I'm thinking, oh, I'll just save time. Like, I'll go on Robinhood right now and do the wire, blah blah blah, and like I won't even have to go to the bank and get a cashier's check or anything like that. It'll be quick, fast. Like, I'll come pick this car up tomorrow. It was 8 days later that I got to go pick it up.
See, at that point, just do ACH, right? Like, why even go through the wire system if it's going to take that long?
Exactly. Well, and then the thing is, okay, well, then you sent it to the wire. How sure are you about those numbers you typed in? Because there's no getting it back.
Right. That's the other issue, is that there's like no flexibility to it.
And it's gone. Like, it left your account, but the auto dealership isn't saying that they've received it. For like 4 days, I'm sitting here. Okay, first day, whatever, right? But
it's just in space.
Yeah, the third day, you're like, bro, y'all ain't seen my money. Like, who's got my money? So anyway, that was a bit stressful.
Yeah, troubleshooting in that system too. It's not easy being able to.
And Robinhood was no help. They were like, they couldn't even go back and tell me. And I was surprised on this. They couldn't even go back and tell me what the numbers that I sent the money to were. That, like, so I could like, okay, yeah, those were that I could like double check that I'd sent to the right place.
Right.
Yeah, because then you're like, okay, well, I cut and pasted.
Was that over email, or were you talking to someone on the phone?
That was initially chat, then talking to someone on the phone, which happened really quick, by the way. Like, good on Robinhood, because like they had me on the phone with someone within probably 10 minutes of me starting looking for help. Okay,
so and that sounds like they've improved that process for, what is it? People
massively, at least getting someone on the phone.
But that's a different segment though, because you're like in the million plus, right? So they have a different category for customers that, like, you guys do get phone customer service, whereas people under 10,000, I think it's still email only.
Gold, maybe, I don't know.
Maybe gold, yeah. I'm sure there's a way they categorize it.
Yeah, I'm sure. So anyway, but yeah, like I had someone on the phone pretty quick. But they were not with the wire group. So that call ultimately yielded me no help other than I will reach out to the wire transfer group and have them email you. And so then they were sending me emails on a day-to-day basis, just like saying, hey, did you hear from this yet? Not much they could do, but I was surprised that they couldn't say, hey, these were the details that were submitted to us and that this is where the money got sent.
Right. Yeah, minimum you should be able to do that, right?
Right. So I was just surprised that, and I'm not a big financial person. I don't send that many wire transfers. So I was a little surprised that was not, maybe it's standard, but I was just surprised.
I mean, that's standard for wires. Now, whether or not that's acceptable, that's like how complicated it is just to send money and move it around, that's a whole different thing. Like, that's a solvable problem.
Yeah. Well, I mean, it has been solved. It's called freaking Bitcoin.
Or stable coins, right? You don't even have to get to a different currency. You can just blockchain it. So yeah, it's interesting. But ultimately nothing happened and they were able to hold your car for you?
Yeah.
Okay.
So it's all been delivered, and then, of course, instantly, within 20 minutes, driving off the lot, the low tire pressure sensor is telling me it's broken. So,
oh, there's Murphy again.
Yeah. Well, you buy used cars, you get used car problems.
Sure.
But then so I turned it on this morning, and the faulty reading's not there anymore. So I'm like, okay, well, no point in trying to take it back or anything.
Right.
But anyway, it's a nice car. So. But we're not going to drive it that much. I mean, we're still going to do most of the driving on the Tesla because no fuel cost, no
Right.
maintenance, next to no maintenance cost.
Right. Yeah, it just makes sense too.
Yeah.
Yeah.
So
Speaking
this will just be our you need it. We have to have a second vehicle because you have to be in two places at one time. That'll be what that's for. Or if we have to haul something.
Or like a really long distance trip or a big haul. Yeah.
Yeah.
Speaking of a big haul, Nvidia, they hauled in big numbers.
All the money.
Big numbers.
All the money.
Bro, their investments aren't even paying off yet. Like they're getting dinged because their margin is down because they're throwing money at their supply chain.
And then he must have said something during the call, which I didn't have a chance to listen to, that obviously reverse the initial bearishness. That thing sold off from like 212 to like 207, and then it's at like 220 currently after hours.
It almost got to 220. It ended up pulling back. What they said on the call was a few things. It was mostly the CFO commentary around how there's not a single cloud that's not using their architecture, and that there's just not many companies. And Jensen's talked about this for a while, so it's not new information. But there's not many companies that actually have the ability to do what they do, full stack end to end. And they gave some timetable updates on Blackwells and Rubens and when those are going to be shipping. So I think that's what the market liked. Here's what the numbers look like here. Let me make this full screen here.
I mean, I feel very much like Tanner. Like, how can you? This is a swan. This is a sleep well at night company.
Yeah. So you've got, it was like triple digit top line growth. Here's the revenue, and it's just like continues to explode. Maybe it would make more sense to put this visually here in a chart.
I know I DM'd you the graphic on off of Robinhood.
Oh yes, that's a good one. Thank you. Yeah, there we are. So here is.
If you've ever seen boys and girls, that's what up and to the right looks like.
And this is just 4 quarters too. Like this looks like 4 different years for most companies, right?
Mm-hmm.
Like this is what it would look like for like Broadcom over the
100 billion in revenue.
years.
Yeah, it's just a quarter.
And like the rate of acceleration too. You know what I mean? Like the quarter over quarter.
Q2 26 they made 50. They were less than 50 billion. Q2 27 they're at 100 billion.
So they've over doubled. They doubled their EPS basically from Q2 to Q1. So in 3 quarters they doubled their EPS. Like that's disgusting. So
and the share price has basically been flat the whole time.
Indeed it has. But there's reasons for that, right? There are reasons.
Yeah, I mean just when you're the number one company in the world, no one wants to pay more for you because everyone already owns you, right? So you're not getting new investors, right? Like no one who didn't have Nvidia is like, oh yeah, that Q2 2026 numbers, that's finally like, okay, fine, I'm buying. Except for Michael Burry.
Did you see this number? I think maybe this is why initially you saw the negative reaction. Is probably the algos reading the flatness here on the net income. Right?
Yeah. Well, we knew that was going to be an issue because memory prices are higher and they are.
Wait, what? Do you know what this
so
is?
Much for
it's because of this.
So much in their supply chain.
It's whatever this item is, 7.7 billion. Do you know what that is?
No. No, the margins are sustainable. No. It's that the margin growth is not sustainable. We don't think so, at least.
Well, let's challenge that. Let's have a look. So here's the EBIT margin. So nice and steady
But
there.
Jensen has never cut prices to capture market share in his entire history as CEO.
Right. Yeah, he
He's
believes
not giving
in
up margin
cost.
once he's got it.
Right. As we can see, it's only gone up here. 75% gross. And almost all that drops to the bottom line, which is like the most disgusting part of the business.
Yeah. So he may have to deal with macro indicators that affect his costs, but he's never reducing his prices.
All right. Where's our free cash flow going? This is like live real-time analysis here, me trying to figure out what happened in the quarter.
Yeah. No, they're it's not an RPO, but it's like the money, I forget what it was called. It was the first time I'd really heard that term, but the money that basically they have committed to spending on their client states, on their subordinate companies and the ones they're investing in, has more than doubled this from quarter over quarter. Went from like I think like 100 million to 215 million or something like that in a single quarter. I'm pulling that number out of a bad memory. But
do you see this? It says they added $22 billion to their account receivable. Now I need to look at the balance sheet. This is why it's important to know all three of them, right? Because they all affect each other. Like, I know the balance sheet's boring, guys, but like you have to do it. Receivables. Where am I at? It should be on this side. There it is. Receivables. There we go. Oh my goodness. Yeah, so that's what it looks like when you add $22 billion to your receivables. So guys, this is what
okay, can you
that's what other companies owe NVIDIA.
Okay, right. I was gonna say, so let's not assume everyone knows what the
receivables, this is other people owing NVIDIA money. So people need to be paying their bills. Now, obviously, at the more throughput, the higher your sales are, the more receivables you're going to have, right? So like the bigger Walmart gets, the larger this line item is going to get too. I bet Amazon is not going to be a clean example because of it's a mixed business. Yeah, let me do Costco. As Costco opens more warehouses, the receivables goes up, right?
Yeah.
This could be from Visa, right? This could be from people, like product that they've already sold, but the manufacturer maybe hasn't paid them yet. This could be a number of things. And then if it's the other way around, it's payable. And that's what Costco owes other people. So that's why receivable is an asset and a payable is a liability, because that's money that you owe people. So the question then becomes, if these receivables are exploding here, this is money that
who owes it to them?
Who owes it to them, right? So that's probably going to be OAI and Anthropic, right?
So they did break down, or they separated, and maybe it was their revenue, maybe not the accounts receivables, but they did break down like Mag 7 or hyperscalers versus neo clouds, and then I think everyone else. I think they did it 3 ways, which is really nice to know. And then, I mean, as you can imagine, the hyperscalers are the lion's share.
Okay. So are they just getting better terms, like they're stretching it out?
Like, I don't know. Like I said, I really didn't listen to the call. So, okay. So compared to AMD and Broadcom, they're not fair comparisons. No. Like at this point, AMD and Broadcom are chip companies.
Right.
NVIDIA's left them in the dust.
NVIDIA is like the bank of AI now, so their balance sheet's getting messier, if you will. Because like Broadcom hasn't made like huge investments into all these different suppliers.
We cannot discount CUDA existing either.
Right. Yeah, so here's the inventory. So this is just chips that, you know, are in their inventory that just haven't been delivered yet. And again, that should naturally go up as the sales do. So that makes sense as well. Right. So I'm curious about.
So that's good to me because it means they're ramping production, and when we pair that with the account receivables, that means that they're selling the chips. They're also producing more.
I am curious about this line item.
That was a big Tesla thing for quite a few years. Remember, like Elon being incentivized just to hit production goals and just build X number of cars.
Right.
Same issue here. Like NVIDIA, I mean, every indication we have is they can't sell. They can't build enough chips to sell. Like if they could build more chipsets, they would sell them. Speaking of NVIDIA, I also applied for their like local hardware stack, Edge AI device.
Okay.
To get in on the beta on that. I don't know, but I got invited to apply for the beta. How does that sound? So we'll see if that happens.
I want to see what this operating expense is. They would have had to call it out. $7 billion is a lot of money, so I want to know.
I almost said $7 billion. It's not a lot of money to.
It is, though.
NVIDIA.
It still is.
Not to NVIDIA.
What was the other item? Oh, the receivables. No one asked about the receivables? No questions about customer concentration?
I think that was largely addressed by them breaking out their breaking down the stack of, I think it was revenue.
Nearly 20 companies, including Cursor, owned by SpaceX, Figma, and Together AI, now exceed $1 billion in annualized run rate, up from 13 companies in Q4 of last year. So from 13 companies up to 20 are now 1 billion plus ARR. Okay, it's still very top heavy, right? That the 1 billion ARR is not a big number for them.
But I live with that kind of with Palantir as well. Especially like 2023 Palantir. Remember that? They had like 10 customers that had like $10 million accounts with them.
Yeah, but number one, Palantir is now 5 trillion market cap, so they don't need as many big customers, right? Like there's only 4 companies, maybe 5 in the world that can spend what's going to help move the needle for NVIDIA. And like they're all already spending as much as they can. So that's kind of like why I don't own NVIDIA, is because like how free cash flow negative can the hyperscalers actually go to sustain the growth rate of NVIDIA? I'm not saying it's bearish. They need to continue to create value. And then
NVIDIA is also boosting other customers of theirs. Right, they're investing in future customers.
Right.
So
they're trying to create a market, whereas Palantir,
so their existing customers, right? Their existing customers are buying stuff from them, but I mean, you know, their ultimate vision has to be to sell NVIDIA to everybody in probably removed by several layers, but for the average person to be using NVIDIA all the time. They might not know it, but that is the goal.
Yeah, call that crushed this call. Let me pull it back up here. We can just read through some of it. We delivered another outstanding quarter, record revenue, operating income, total revenue of 96 billion, more than doubled year over year. Surge in AI demand, global infrastructure build out. We expect revenue to grow by approximately 70% in fiscal 28 with a supply constrained outlook. Q2 data center revenue increased 18% quarter over quarter to 89 billion. Hyperscale revenue of 49 billion grew 13% sequentially, driven by sustained strength in Blackwell. So that tells me if we have 89 billion of data center revenue and you've got 49 coming from the hyperscalers, that would mean that you've got 89 minus 14 or 49. So you've got 49 from the hyperscalers and 40
from the rest of the world.
From everybody else, yeah. So over half of your data center revenue is coming from 4 customers, right? No.
Yeah.
SpaceX, 5. Right? Meta, Google, Amazon.
So
Microsoft,
is that
SpaceX.
the good thing or the bad thing?
Is it good that SpaceX is becoming number 5, or is it? Or are you talking about the concentration?
No, I'm like, okay, yeah, they've got a lot of customer concentration. So if one of those customers decides to change their provider, then NVIDIA could be in trouble. Well, that's where CUDA comes in.
Right.
Like you develop you develop a platform and you get them locked in on your platform.
Right.
And then okay, so like, what are you supposed to be bearish? I mean, hey, they have the 5 customers in the world who could choose anyone they wanted to, and they have the money to choose anyone they wanted to, and they're still going NVIDIA. And even Google's like, yeah, we're making our own TPUs, but we're still buying NVIDIA, right? Like,
same thing with Amazon and Trainium, right?
Right. I mean, those are not much more than science projects.
I think that's
like NVIDIA is actually building chips. I mean, sure, Broadcom is building them for building TPUs, but again, General has more value in my mind.
Yeah, so reinforcing that more compute drives more revenue as new GPU capacity comes online. They are expecting the cloud industry to have a backlog, or sorry, their cloud industry. No, sorry, I was right the first time. Total cloud industry backlog is now greater than 2 trillion. CapEx by the top 5 hyperscalers expected to reach nearly 800 billion in 2026 and 1.3 trillion in 2027. So they are including SpaceX there, which obviously has now raised a shit ton of money.
Yeah.
Today we are delighted to announce an expansion of our partnership with AWS, and this is when the stock started moving. AWS is deploying an additional 2 million GPUs starting this quarter through the second quarter of fiscal 2029, along with Vera CPUs, some integrated with Rubin, others standalone. AWS will serve NVIDIA Nemotron family of open models.
Boom.
Fuck you, Sam. Fuck you, Dario. Nemotron
Yep.
open models on Amazon, Bedrock, and SageMaker. Amazon will also adopt our full physical AI stack, Omniverse. So this is like further recommitment from Amazon that, like, yeah, we have our own approach to this because we also want to control our own future, but like we're very close partners on this. Number 1 cloud provider, number 1 chip company, best bros.
Yeah. Interesting question. Does anybody raise any issue with Amazon? Because they're saying, okay, well, oh man, Amazon's losing competitive edge now to NVIDIA. Does anybody complain how much Amazon buys Intel chips for their work PCs?
Are you talking about like how they're relying on a vendor? Like how Amazon is partially relying on NVIDIA? Amazon
would be paralyzed if they couldn't buy Intel PCs for their general workforce.
I mean, there's a lot of things that could be paralyzing, right? Remember that CrowdStrike outage?
Yeah, but I'm just trying to add some perspective. Okay, like all these hyperscalers, everyone's like, oh, they're getting screwed. They don't have pricing power. They can get screwed by Nvidia. Well, first off, I don't think Nvidia has shown that they are trying to price anyone out of the market. They just physically still can't build enough chips. But there's other things like the work PCs, the work laptops. Like no one's complaining that, I mean, and I don't know what work phones they use. Maybe they use Apple work phones for Amazon. No one's complaining that Amazon has all the price, or Apple has all the pricing power on Amazon's mobile connectivity. Like this, find me another bear case. That's all I'm saying.
For Nvidia?
Yeah. Before for the Amazon Nvidia relationship. And you're saying you don't own Nvidia, but I know you have Amazon. I don't know why you wouldn't buy Nvidia too. Like, it's like every dollar that you're losing on your Amazon spend, which the market is hating on the hyperscalers for spending all this money on AI. Well, if you also own Nvidia, then you're also collecting all the money. So
yeah, but it's not one-to-one, and it's more complicated than that, right? Nvidia also has a bunch of other customers. They have this weird relationship with the Frontier Labs. Like they're releasing Nemotron, but they're also invested into like these Frontier Labs that are also buying their chips. And
yeah, I don't have a problem with that. That is, Nemotron is
but it's a different investment
to the
my point.
Frontier Labs what the Frontier Labs are doing to everyone else, which is we're reading your data, we're seeing what you're doing, and we're just going to copy your business and roll it up and include it as part of our services that people can buy. NVIDIA's just like, yeah, we'll just offer an LLM as well.
I'll put it this way. A bet on Amazon, if AWS continues to be the story, and I think it is for Amazon, right? Like the retail operation is kind of taking a nap right now. It's still doing well, and like advertising is there and Zoox is there, but like let's be real, everyone's looking at the main course. A bet on Amazon feels like a bet on NVIDIA as well, because they're building on that architecture. So whenever NVIDIA has a product improvement, the buyer of that product is Amazon. So they're going to get to capture that upside without all the headache of dealing with Frontier Labs, all the headache of being the bank of AI, without the circular financing stuff. You know exactly what you're getting with Amazon, which is the number one cloud service provider buying chips and making their own. Whereas with NVIDIA, it's a little bit more complicated. You have to worry about funding, right? You have to worry about capital continuing to come into the ecosystem. You have to worry about making sure that you're planting seeds in the right spot so that the ecosystem continues to flourish. For those reasons.
So that tells me that NVIDIA has way more upside than even Amazon does.
It could. Yeah. Like if all those bets work out, right? Just like Google Ventures, like they've made a bunch of good bets and now they're cashing in, right?
Yeah.
Yeah, I just think they're different investments. That's all. But I understand what you're saying. Like if you can win on the spending side and on the picks and shovel side, I get it.
Yeah, I mean, because that is what has held a lot of the Mag 7 and the hyperscalers down all year, is people complaining about the AI spend. It's like, well, buy the company that they're spending it on, and then you own both sides of that equation.
Sure. Or I can ignore all the people complaining about negative free cash flow because they're being pussies, and just understand that I'm not going to be graded on a 90-day or 365-day timetable. I'm invested, dude. I'm 30. Like I can wait it out until the free cash flow spend moderates and everyone starts to actually see, the fact that like a gold mine was just built. They dug it out over the last 2-3 years, and they're going to continue building it out over the next 2-3 years. And then on year 8, 9, 10, 11, everyone's going to realize how valuable the gold mine is. Yeah. And then I'm going to win. and I have the ability to just sit and wait, right? I don't have to buy the picks and shovels if I don't want. I can just buy the people who are buying the picks and shovels and the high-tech machinery, and now they've got the caterpillars, and now you're mining gold faster than the people in the river who are panning for it. That's what Amazon is, right?
Yep. And I am so jealous of your generation. I mean, mine had a pretty good run. Like we had internet 1.0 at your age, but man, I'm just like, I wish I could be 15 years younger. And
well, I mean, didn't you get like the bull market of like the 50s and 60s too, right? That's what Jackson told me. He said you were there for it.
Yeah.
Shout out Jackson, man. Shout out Jackson. I know he's in the chat. Yeah, dude, it's interesting. What do you think about the Nemotron thing? Is OAI cooked? They just had an executive leave.
They had multiple executives leave, bro. Not okay. So here's the really weird thing: the executives went back to their old companies,
right?
Like, and that's like, okay, who's like, oh, let me hire this person back. Like, they already dipped on me once. Let me hire them directly back. That's weird to me, because it's like, okay, you pieced out on us.
So this is the head of data centers. Yeah. And then who else left? And it looks like it should say it here in the CNBC article. Earlier this month. Oh, the chief revenue officer.
Yeah,
that's right.
Yeah. Right in the months before that their IPO. Like,
right.
That's not a good look.
Dude, is like, okay, what do you think about this pair? I have a pair trade idea. Who do you think is the most exposed to OAI?
Well, it's obviously Microsoft.
Obviously Microsoft, right?
Followed by NVIDIA, probably.
What do you think about the pair trade of, like, if OAI fails and they don't pay their bills, but cloud demand and everything else is real, but like the OAI, it just doesn't work out. They're not $1 trillion company. They're like a $50 billion company. What if that reality comes? Wouldn't Microsoft get like punched in the teeth a little bit?
Yeah. Because you can't imagine a world right now where people aren't trading Microsoft and owning Microsoft based on the fact that they have OpenAI that gives them their OAI exposure.
Dougie lived through the Great Depression. Dougie was there during the Grapes of Wrath. He saw it go down. It says also you have the OpenAI's product and business chief also leave.
Yeah, like these are big roles, like directly ahead of the IPO. Like, so they're telling. So are these people telling me they're fully vested and they're leaving so that they can get their payday? That doesn't seem right to me. And speaking as a company that IPO'd and whose stock price went like straight down from IPO. But yeah, everyone was psyched the day of. Like, no one was like peacing out ahead of it.
Right. Okay, here's the full list, because I know that there's been a long list even before 2026. So here's the full list. It says, so here's the people that we just talked about. You had Brad Lightcap left in August. Oh yeah, the COO. That's right. I forgot. Product and business leader. AI ethics lead departed in July. Chief marketing officer left in April. This is like all their entire C-suite is now gone. Head of science left. Head of Sora departed in April. And the CTO, Chief Technical Officer of Enterprise Applications, left in April. Holy shit.
Yeah. Was it Chloe Baccalar that actually went and started another AI company as well? Like
this guy? This lady?
Yeah, didn't she start another company
Let's see.
that's now starting to get decent valuation?
Let's have a look.
I know it was one OAI person. I thought it was like an ethicist type. Well, there's an staring into the infinite.
Whoa. I didn't even realize what was happening. I shared the wrong screen. Let's try that again. There we are. Did she go to Meta? Where did she go?
No, I thought she started her own company. But leaves under mysterious circumstances. Yeah, lots of mysterious circumstance stuff going on at OpenAI. So here's the thing now. Would OpenAI be better off if the board had fired Sam Altman and Sam stayed gone?
Obviously.
And do you think that all the employees that basically pitched a fit and basically mutinied around that in order to bring Sam back, do you think they would rethink that decision now?
Oh yeah, they would have. I bet they're kicking themselves now, being like, "Damn, we should have just let Dario run it." Right? I mean, look how much more successful Anthropic's been than OAI.
Yeah,
and in short order too.
Yep.
And they don't have this Elon lawsuit. They don't have Sam lying to everyone. I mean, they do have Dario lying to everybody, but like Dario hasn't. Anthropic has seen some turnover, but not like this.
Yeah, but hey, like Sam's on the cover of Time magazine.
Good for him.
Trust us.
I wonder if I can get a straight answer like this. I'm just going to ask, how much money does OAI owe NVIDIA? That seems like a good question. Okay, no cash, it says. Says the Google machine. Not directly, anyways. Does that seem right?
No, that doesn't sound possibly right.
NVIDIA has guaranteed up to $105 billion in data center lease obligations for OpenAI, which meaning NVIDIA would only pay if OAI defaults. $105 billion. Wow. But they could just take it over and run it themselves at that point, right? Like if OAI shits the bed, NVIDIA would just repossess it themselves and run it. Jensen could do something like that, couldn't he?
Yeah.
What do you got here?
This is how bad the OpenAI IPO is going to be. Like, we've already lost all the trust in you. The whole country has turned against data center and the build out that you need against their own self-interest just to stick it to you because you creep them the F out. Yeah, no, you're cooked, bro. You're cooked.
It's not the best. Speaking of
moving on,
Microsoft Copilot is not good either. And I think I'm not breaking any news here, but like I tried to use it the other day at work because it's the only one that like my work lets me use, right? So
yep.
I asked it to edit a big long Word document because I'm dyslexic and I miss key things and my brain works faster than my fingers, so I make grammar mistakes all the time. Now it successfully found all the grammar mistakes that I made and had a lot of good recommendations for how to fix it. And then I said, okay, great. Like, let's do all the things that you just talked about doing. Like, I'm giving you the green light to do it. And the implementation phase, it just absolutely fell apart. And what was going to be like fixing 7 grammatical errors turned into like 12 new ones that it created. Yeah.
Oh man, you missed an opportunity there.
For what?
You asked it to fix 7 and only fixed 6.
We're still doing that. We're still doing that.
The kids are still doing it, man.
They are. I was at a Diamondbacks game last night. The kids are definitely still doing it.
Someone told me they weren't, and I'm like, you're not paying attention to what.
Yeah, they are.
Was it last week? They were like, oh yeah, let the adults start doing it, and the kids will start rolling their eyes. Yeah, but the kids are doing it when they're like with other kids, or when they're in front of a camera or something. If it gets them on TV, they're definitely still doing it.
Oh, for sure. Yeah, there was a kid there at the game last night. He had his rally cap on. The Cubs were beating our ass. It was 4-0 in the 7th inning. And some guy, Clay something or another, he was pitching for the Cubs. He had a great game, only 2 hits, made it through the batting order 3 times, 7 scoreless innings. And then his relievers blew it. 3 different relievers the Diamondbacks went through in the last 2 innings. And this kid had a rally cap on, right? So he had the hat inside out. And as soon as we got the first hit, I started hyping him up, giving him gas, saying, oh, it's the hat, it's the hat. And just every single time we got another hit, this kid was losing his mind. And I was just gassing him up the whole way. And we're like high-fiving. And Selena's a Cubs fan. She thinks bears are cute, right? So that's how girls sometimes root for sports. Is like, oh, bears are cute. I want to root for the Cubbies. Look at their cute little ears. That's literally her logic, guys.
Hey,
I'm not being a misogynist.
My wife grew up outside Chicago, so she's a Cubs fan.
Yeah, so we got to do a whole lot of this last night after we hit a walk-off home run. It was great. So so Microsoft has the exposure. Have you noticed? Joseph Carlson talked about this a little bit, but have you noticed how hard it is to figure out how much of their cloud is like legacy business versus like what's Azure and what their OAI exposure is? I know they started breaking it out a little bit more, but it truly is impossible to tell what the growth rate is.
Yeah. I mean, they've never wanted to tell us, right? For good or ill, but now you're seeing why. And look, lots of companies, though, make small investments in other companies, right? And they don't feel the need, and because they're so speculative, they don't feel the need to like itemize that on all of their earnings reports, right? I mean, and all you really need to know from this is Microsoft still, well, aside from the fact that Sam has pissed everyone off, including Satya.
Oh yeah,
and probably has no friends left at Microsoft.
There's a Wall Street Journal article written about it.
Yeah, so it's not all. I agree. Like 2 years ago, them not posting their OAI, numbers specifically broken out makes sense. But at this point, it's kind of like, well, come on, man. Like, you're telling me they're going to be a multi-trillion-dollar IPO and come out as one of the top 20 companies in the world when they IPO.
Can't
and you're
be.
saying, and you're not posting their numbers yet as part of your valuation, like that doesn't track. They've got to do a better job than that.
Yeah, no notes. We had some more big news from another big hyperscaler spender, Meta. Here's a good question from No. Meta problem over or still beginning? I'm assuming that this is referring to the lawsuit settlement.
Problem just beginning.
I'll take the other side of that.
Yeah, you're gonna lose. Sorry. Literally all 50 states just learned that they can adopt the European business model of just sue American big tech companies. Whenever you need some money, just take them to court and they'll pay.
So how much did they actually pay though? Do you know the deal? Details?
Yeah, so we talked about it a little bit this morning on Amit's channel. So it was like, I think it's it's up to 16
Right.
if like Snapchat and TikTok and
YouTube.
YouTube agree to do the same thing.
They're not going to.
And they're not going to. So it's like 5.
Did you know that it's also paid out over 10 years?
I didn't even know that. I mean,
they have the
could
ability to
not
pay it
care
out over
less
10
about
years. Yeah, dude, that stretches it
But
down so
they're
much.
gonna do it again in 2. Because California has debts to pay. All right.
Yeah.
And they can't print currency like the federal government can.
Right.
So they're gonna be back. Like they have just greenlit sue all the tech companies to extract the value to operate the states. I mean, it's going to be the playbook for the DSA.
Yeah, but
just sue big tech. They'll settle. We'll get a couple billion, so we don't have to raise taxes.
I understand we don't like the precedent, but like American regulators have always been able to punish companies that they feel are breaking the law or doing something that's like pretty harmful to the general public. But it does always seem to end up being a speeding ticket. And I know the EU, it's more than a speeding ticket. It feels more like a shakedown. But
that's all this is going to become.
But the magnitude of it is so small that I think they are clearing the regulatory pathway to
got
not
their
have
first
to deal with
win. The size of the first win doesn't matter, bro. The fact is that they got it. And now everybody else is going to have to line up to kiss. It's just like
it wasn't a
all
win,
the big
though.
tech lining up to kiss the ring with POTUS at the inauguration. Now they're going to have to do it to eat in each individual state. Probably blue states more than red, but still.
Yeah, I feel like this. It's not a loss though, because it was a settlement. So there's not like a law or a rule that they're breaking here. What they're doing is they're establishing, though, that they are going to make changes here. So they're getting the public off their back. The regulators literally don't care unless there's public outcry for it.
Yeah, but these are the states, not the, like, you can't go solve your problem with one agency. This is too many states piling on. They're gonna collect their pound of flesh, and look, they're gonna get a speeding ticket for Meta. They might have even cut Meta a deal and say, "Hey, look, you're the first one. You're not really the target here. You were just the easy one, so we're gonna let you off with this just $5 billion over 10 years. It's nothing to you."
My point is,
it gets us the headline, and it lets us say we're gonna lean on whoever we don't like now. Like, we're coming after them.
I get it. It increases the cost
of every company down the pipe.
But they can only do that though. Like, state regulators can only launch war like this if they have public support behind them. If they don't have public support, like say Meta had a better relationship.
They do. But
they do. That's what I'm saying. But if Meta can fix the relationship,
if you don't think Tesla is gonna pay 10 times as much for whatever reason,
but the reason that the states are able to do this though is because a lot of people do believe that social media is bad for you. It's unhealthy. They don't consider any of the upsides. So Meta has lost the public war on, is social media good or bad for you? Like, is it useful? Like, what's the responsibility level on the parents to make sure that they're actually present for their kids and not just like giving them a phone at 12 years old and then checking out? Meta's already lost that war, they've been losing the battles, but maybe they're going to try and make a comeback on the war. And then if Meta becomes a likable company like Apple is, right, as an example, then they're not going to have to deal with this bullshit anymore because the state regulators won't be able to do it. That's what I could see happening. At the end of the day, like, Meta is a really, really powerful company when it comes to especially political elections, right? I don't think you want to get on the wrong side of one of the platforms that has the most reach. That's one thing I would think about if I was running for office, right?
I mean, sure. But I mean, we've already seen that that Meta in particular will absolutely capitulate to whatever 3-letter agency shows up at their door.
Sure.
To say this is the only message that is allowed to be broadcast, and anything that we don't agree with has to be censored.
Well, I mean, they did that already in 2020.
Yeah, that's what I mean. Like, they're going to do it again. There's nothing to stop them.
I'm tired, boss. I'm trying to find some Meta numbers that I had posted earlier here, because just outside of their legal fees, they do have a dropping operating margin because the R&D is starting to hit their income statement. I was just trying to find those numbers here. One of the things that is interesting about Meta is all the other clouds, they can offset. They're not seeing a huge operating margin drop because they can offset the R&D cost with the income that they're getting from the cloud, right? So they're not seeing like a huge margin drop, whereas Meta is spending money and that R&D is now starting to hit their books, but there's no Meta cloud revenue coming in to offset that, so it's all downside to the operating margin. I don't know why this tweet is gone. It's interesting. What do you think about Meta here? Like, are you looking at it?
No, I sold all my Meta. Remember?
It's all gone.
Yep.
Oh, here we go. We finally found it. It didn't disappear. I'm not crazy. Okay. So I had posted, let me tee this up a little bit better here.
I mean, honestly, I expected this lawsuit to hang over their head for way longer, which is part of the reason I sold. But so congratulations on to the Bulls that held on. But I'm sitting on $250,000 in cash now, so nanny boo boo.
Nanny boo boo. I like that. So here is the income statement. So one of the first things we'll notice is, of course, the core business very, very strong up and to the right.
Super strong. Love the business.
Having the gross profit in Q2 be higher than their advertising peak of Q4, that's actually disgusting. Now, here's where we get into some like R&D spending, right? We get into some higher operating expenses, which we'll get into here in a second.
Yeah, that's what I want to know is, where does all that OpEx?
Well, a lot of it's this right here, right? So like their depreciation's going higher, and that's starting to come through in the OpEx. You also got SG&A going higher, but yeah, the big jump of it here is both higher R&D and also what I mentioned in this tweet, which I'll flip back to now, which is you had some severance charges and you had some legal charges. Legal was $2.4 billion last quarter. Severance is 1.18, and that's because they laid people off in the first half of the year. But overall, the cost and expenses were 55% higher year over year, which caused the operating margin to drop from 43%, the old operating margin, down to 31%. Now, recognizing that these two items, legal and severance, are one-time charges,
right?
Let's go ahead and back those out, right? Because that's probably not fair to expect those going forward, although we know that the legal fee might be an ongoing tax now, right? Both from the EU and from now, it seems like states. So, but if we back that out, the cost and expenditures were still 41% higher than they were year over year, which means even when we remove those two items, the operating margin dropped from 41 to 36. If the CapEx continues to spend and they continue to just increase it, and you just get more and more depreciation without compensatory revenue on the other side to balance it out. So you need growth on the revenue side, but if you don't get growth or you don't get any neo cloud revenue like they want to do, then this operating margin might continue to drop. So that's my concern with Meta. That's also why I don't hold any. I also really didn't like their gambling app thing, the prediction markets they said that they wanted to do. It's like, guys, don't you have enough law issues that you guys want to slap a sports betting app on here too? Like, I don't know.
Yeah, this wasn't enough for you. Yeah,
I saw someone on X. They're like, "Hey, why?"
But hey, it's not stopping Robinhood. So,
well, but they're in a different world, right?
I mean, they're in Elizabeth Warren's world. So,
yeah, she's always complaining about something, but yeah, I think that's more of a space for Robinhood since they're already having your money, whereas Meta they are already having issues with like minors and addictiveness, and they don't have a good public image like we've just talked about. So it's just going to make it seem like even more soulless than it already is to the majority of people.
yeah,
because they just don't.
Look, they're gonna have a giant problem, because those other companies are not going to capitulate on the same terms. Maybe the terms get worse. Maybe those companies all get sued next.
You mean TikTok, YouTube?
Yeah, TikTok, YouTube, etc. So maybe they're just next on the chopping block, and this was the best deal that they would have gotten if they would have joined Meta, right?
Right.
Which I think is freaking stupid. I hate that as a capitalist.
Might be the way it goes, though.
But yeah, it might be the way it goes. That all these companies have to pay to play, which means regulatory capture is now complete. Because it means the instant you try to run a startup, if you don't adhere to those standards, you are locked out.
Yep.
You're going to have a $5 billion speeding ticket before you have $1 million in revenue.
And for those who don't understand, like like what regulatory capture is, there's a great Bill Gurley speech on this. Just type in Bill Gurley. What is it, like 2,100 miles or something? That he did that podcast. The way that I would explain it is, you've got a few leaders in the space, and they make the regulatory burden and administrative burden so high that more mobile and nimble companies can't come and disrupt them. So like a great example of this is banking, right? There's so many rules and paperwork around banking that you need at least 25 lawyers to start a bank and get a bank charter, which then they have to give you a bank charter. Like, it's basically a cartel. Like, they lock you out until you're in the club, right? And Robinhood seems to be like the last financial institution to sneak in there in time. But if you make the threshold to do all those regulatory boxes and to be in compliance with the lawmakers, you don't have the ability to challenge the incumbent.
Right.
So yeah, it does seem like that might be where they're going. Someone had asked on X, like, why doesn't Meta buy Snapchat? I'm like, oh yeah, it's not like Meta has enough issues with their minors anyways. Like, let's just go ahead and buy Snapchat's business and invite a whole nother problem with a group of people who churns every 10 years off of the platform. Yeah, Snapchat investors are interesting, man. It's like, let's recycle the same group of broke demographic users, like college kids and high school kids, that as soon as they turn 26 and get off their parents' health care, they immediately delete the app.
I mean, hey, being on their parents' health care until 26 is already the infantilization that I could never have imagined growing up in the 80s and 90s, that you're still considered a child until you're 26.
Have you heard some of like, I know this is a bit more of a culture war thing, but like guys like Leo, like in their deep into their 30s or into their 40s, and then they'll go date like a girl who's like 24, and like there's a horde of women that will just show up and act like that 24-year-old is like a Bambi that needs protected from the old guy.
Yeah.
Have you seen this?
I believe it. I mean, I haven't seen it, but I believe it.
It's like, who are you to tell that girl that she doesn't know what she's doing? Maybe she knows exactly what she's doing.
Yeah. No, the whole like older guy dating younger girl thing, that's now considered abusive, I guess. I don't know, because adults aren't adults.
Yeah, it's certainly gotten interesting. What else did we have? We had we can stay on the on the AI theme here. We've got an interview here that I have not seen, so it'll be my first time seeing it. Dougie, you saw this clip on CNBC between Mr. Benioff and Dario. So let's have a look at that.
Joining us now to discuss the partnership is our own Jim Cramer, along with Dario Amodei, Anthropic CEO and co-founder, and Mark Benioff, chair and CEO of Salesforce. Jim, take it away.
Gentlemen, couldn't have really more exciting.
I swear, Dario looks like
terrific, and I want to thank you both for being with us.
Movie comedian.
Mark,
say it again.
Dario looks like a comedian from the 1990s movies.
Go right to
yeah,
you.
we're thrilled to be here. We're thrilled to be here, Jim. Thanks for having us, Jim.
All right. Well, it's great. I've not interviewed before. This is very exciting for me.
We're at the top of Salesforce
It's great to meet you, Jim.
Thank you. And I look forward to talking to you more, maybe next week at Dreamforce. I don't know. I want to start with Mark. Mark, I've been a customer of Salesforce for a long time. All I can tell you is that I always thought I knew how to query Salesforce. Why do I need Anthropic to help me query Salesforce?
Jim, this is really the best of both worlds. This is the #1 AI in the world, Anthropic, and the #1 CRM, Salesforce, coming together for the first time in an incredibly powerful way to build a new product called Claudeforce. And you're right, Jim. Claudeforce gives you the ability.
Foundry, AKA AIP.
Is that what?
Not that new.
Is that what he's about to describe?
That's what he's about to describe. Yeah, you can query your business.
Okay, let's hear it.
To look at all of your Salesforce data, all of your data systems, all of your applications and what we call our semantic layers,
ontology,
all of our agents as well, and even building incredible new applications on top of this kind of stack. This idea that you can use Claudeforce to not only query your systems, but build applications dynamically, it's really a first in the industry, Jim. We've never.
You can build applications that use your ontology.
And he said first in the industry, and Dario's just sitting there looking like he got out of the bath. You know, it looks like he's got a bathrobe on.
Oh my God.
Seen anything like it? It's completely exciting. I think that this is the way all enterprise systems are going to run in the future.
All right, so Dario, I think that the combination is terrific, but I also know when I go to my Agentforce page, I see OpenAI's there. I don't know how exclusive this is. I don't know what you get out of it. Tell me how this distinguishes you from other LLM models and why this is so exciting for you.
Well, look, our view is that Claude is the best model for integrating complex amounts of information. We've been using Salesforce and Claude within Anthropic. We're huge Salesforce customers, and as you can imagine, the pace of things at Anthropic is incredible, and we have to both manage individual.
As Mountain investors, we cannot throw rocks at glass house. Okay,
lit up
with stutters.
Amit's chat lit up with the is. I did not know whether to ban people for being like fucking weird or to just let it fly. But it was because he had it's NVIDIA earnings, so he has 20,000+ in the chat, right?
Right.
And the is were it was just walls of text just flying on is.
As you can imagine, The pace of things at Anthropic is incredible, and we have to both manage individual accounts, and we have to answer all these incredible strategic questions that change every time a new model and a new product comes out. And we've found that this combination product that we've built together is the most useful thing in accelerating it. You know, within Anthropic, for a long time, we've been accelerating the research teams within Claude. But this is the first time that we've really been able to incredibly accelerate our go-to-market efforts within Claude. And we want that for all the other enterprises. And me and Mark want to bring it together to everyone.
Oh, look.
I'm sorry, that just
All
the
right.
tone of it, dude, it's not passing the gut check. The tone of it sounds like we don't have the product. We're going to build it, or this is day one.
Yeah. We needed something to announce at earnings because we have our S1 out there now. We want to IPO. So which would you rather have? And we know, like, Austin, noted Zeta Bear.
Not bear.
Which would you rather have? Zeta's data working with your business's Anthology and building Palantir apps on top of it to query it with Nematron or whoever? Or would you rather have those two chuckleheads?
Yeah, Zeta had a really good quarter last quarter. I didn't have any complaints. Jackson and I talked it through, and I was like, dude, I actually don't hate anything about this quarter. It was just at a certain point, it was getting really annoying that like every other mention from the CEO and the people who promote the stock were talking about Palantir, and it's like, shit, if you love Palantir so much, just buy fucking Palantir. Anyways, yes, I would rather have Zeta and Carp than these guys who are working on building a product.
The tape underneath you, Salesforce, fantastic numbers. But I do want to ask you, I know I normally should ask Mark this, but I want to get to Dario. You know, there's this whole SaaS apocalypse thing, of which we thought that you were going to destroy Mark. I know Mark has a big investment in you, but I was waiting for you to put him out of business. What do you think about the SaaS apocalypse thesis?
We're not interested in destroying anyone. You know, we think of this as a very positive sum thing, right? That's the way markets work. We're creating new value here, and the question is just,
what's that sound like? What's that sound? Creating new value. What's that sound like?
It sounds like they want to be Carp.
Yeah.
But they're just not as good. Like, I mean, look, Salesforce is massive. Okay, I mean, they basically make a whole Palantir per quarter. I think last I heard, right? I mean, who knows with Contra's growth, but like it. I remember like at some point someone was like, "Oh, Salesforce is like free cash flow is a whole Palantir every quarter." I'm like, okay, well, maybe
for now.
I don't care. Yeah. But you know, and I'm sure incorporating this will be good for existing Salesforce customers. But come on, like, bro, y'all just invented AIP.
Well, one of the things too that I have actually been bearish on Salesforce. Not so much data. I was more neutral and cautious on that. But Salesforce, dude, it's tough because clearly every move that they've been making for the last 5 years has been defensive. And like Benioff talked about Dreamforce for the first time like 2-3 years ago. And ever since then, they've just been on an acquisition spree, trying to catch up and making these partnerships with companies to try that companies that have more technical expertise and are better builders than them. Like, yeah, it's just not really working for them. And it seems like every single time Carp says something, then like 15 months after that, his competition finally figures out what he was saying, and then they just try to follow suit. That's kind of what it's been seeming like to me. The clip's almost over. We'll just let it roll here.
Yeah, let it roll.
It's not about destroying anyone. It's about how much of these enormous gains go to various various people and various companies. And our philosophy always has been that we want to work with our customers. We want to empower our customers to share these gains with us. And so we've already worked with Salesforce in a number of ways. We're big users of Salesforce. Salesforce is big users of Claude Code, of Cowork, of other tools. We've put products like Claude Tag in Slack already, which is a part of Salesforce. And now this combination is a way to gain something that's, it's 1 + 1 = 3, something that's bigger than the sum of its parts. And I think that's the right way to think about it.
The latest on Bengals wide receiver Jamar Chase.
All right.
Oh man, what's going on with Jamar?
Dude, that's so funny. Latest on Bengals Jamar Chase. He limped off practice like 2 days ago, but apparently he's fine. That's what
okay.
Yeah. So everyone wants to know what's going on with Jamar. I pulled up a chart here that I think is interesting comparing the two. I've really been loving the tools. I'm not like sponsored by them or anything, although they could totally sponsor me. But the tools here on the fundamental comparisons here, I've really been enjoying. So on stockanalysis.com. So what we have here, okay, we have Salesforce free cash flow minus SBC. This is trailing 12 months in the orange. So orange is free cash flow minus SBC for Salesforce. And in the blue, you have Palantir. If you extrapolate out, and the purple line is revenue growth from Palantir, green line is revenue growth from CRM. You can see CRM is decelerating and is very much lower. It's barely double digits. And Palantir is accelerating towards triple digits. Look how fast negative 1.6 billion free cash flow has turned into 2.5 billion. And even more so, look how fast free cash flow went from 500 million up to 2.5. Basically 2 years. And it's very quickly going to get to 10. Carp guided for what, 15 to 18? Yeah. So they're very quickly going to pass CRM. So,
dude, I am going to so dunk on our boy Chris Patel so hard when that happens. Okay.
I don't understand what his hatred towards the company is.
He didn't hate the company, well, except for when he did, but he really just hated the fanboys. Much like you hate Tesla fanboys.
But here's the thing.
He hated that that Palantir had fans.
But we were right. That's the difference. Right? Like Tesla bulls are, if you were buying Tesla in 2017 and 2018 and then you sold in 2020 and 2022,
you were right.
You were right. If you
still haven't sold, you're still right.
Correct. But if you bought at $400 and you're sitting here telling me that I'm retarded because I'm looking at evidence of robotaxi not being ready for nationwide deployment and saying that it's going to be a slow rollout over 50 states, Department of Transportation over 50 states, and all the different cities that they have to deal with. And then there's the geofencing. And you're going to tell me that I'm going to wake up next Tuesday and there's going to be 50 million robotaxis running around and Uber to zero. That's just stupid. That's a little bit different than like, hey, I've extrapolated out the free cash flow of Palantir over the next 3 years. And because the product works and they've proven that it works and they're super, super sticky, we think this company could be a $1 trillion company. And I'm willing to pay $300 billion for it today, even though that looks expensive by traditional metrics. That's a much more nuanced conversation. Whereas, the detractors will just say, well, this is a $40 stock. And then if you actually look at how cheap that would be, like if Palantir goes down to $40, like you're saying that it needs to be a tenth of the price of CrowdStrike, which is just kind of silly.
Yeah.
It was already getting kind of ridiculous when it was at like 120, 130, because I'm sitting here doing like the DCF on it, and I'm like, okay, so I only have to hold this thing for 2 years before it's at a 10 price to sales. Is that what Mr. Market wants me to believe? Is that Palantir 2028 numbers believes that like it should be at a 10 price to sales? That doesn't make any sense.
No, what they're saying, what Mr. Market wants you to understand is there is going to be
a bubble burst in 2027. So the prices, so the sales and all that stuff will decrease, and the multiples will decrease. You get multiple compression, and that's what's holding it back.
I don't know. I mean, if we see more multiple compression, I'm more than happy to keep adding, right? Like that'd be a gift to long-term holders to me.
So let's move on a little further down our hit. Well, we hit that. We actually already talked that. But Raven asked about this in the chat. So if you have one more point to make here on this chart.
No, that's it. I just wanted to show it from an operating income. I mean, the numbers are pretty similar here between the free cash flow minus SBC, but this is just another look at it as far as how fast the operating income is catching up.
Yeah.
And it's catching up increasingly faster as
it's like a year and a half, like 18 months.
Yeah, that convergence is going to happen. So I find that interesting. App 11. It's getting cheap here. I don't own this name anymore, but I know the company pretty well. We can pull up just how cheap they're getting. Do you want to bat lead off here? If not,
no, I do not.
Okay.
Because I when I exited my position, I haven't really followed them outside of like major headlines. So if you've got some,
yeah, so it continues to get more and more cheap, and you know they have really great growth, right? Mm-hmm. And no one's doubting that they have the ability to continue to grow 20 or 30% a year, which is what they've guided for. Now, this is their free cash flow minus SBC against their forward PE. I probably should have used price to free cash flow, huh? That would have made a little bit more sense. Yeah. So just by every valuation, it continues to compress. So a lot of people are looking at this name saying, okay, what if revenue continues to grow at this rate? And like they're just sandbagging guidance, which is a good question, you know, that you can ask. Here's their gross profit. So it looks like one of these names, sort of like Reddit or even Palantir, that just like fundamentally seems to be hitting its stride. And the multiples compressing. I'll do EPS versus PE here. Yeah, there you go. Right, so they hit profitability. They were at like a 700 PE. They hit profitability. And then at one point you had 100 plus PE, 70s, 80s, all the way down to like the 40s and 50s. But this is where we were, looking at it. And since then, it's traded all the way down from $600 to $300, and now it's sitting at a 23 backwards looking PE. So a few things here. So they're kind of saturating their mobile gaming in terms of the surface area. They own that space. They've done a really great job in that space. But where the rubber is going to meet the road moving forward is their ability to expand into e-commerce as well as social media. So they have a social media app called Gist. No one's ever heard of it because, quite honestly, they just haven't. It hasn't taken off. Maybe it will at some point, but the launch was pretty weak. I tried to use the app. I played around with it a little bit. I didn't really see what the purpose of it is or like why I would use that instead of one of the existing ones that already have the critical mass of users for a social network to work. E-commerce seems a little bit crowded to me. So that seems like it's going to be tough to break into, but I know this team executes. So if you're holding app, it's almost pure execution risk at this point. Do you believe in Adam's ability and team to transfer what they've done in this one category into a new category and continue growth? That's the $1 million question. I have that in a too hard bucket. That's why I sold at like $450 when I did. I was like, I can't answer this question anymore because clearly the core business is kind of slowing down.
Yeah, so they had their one-hit wonder and they nailed it. Let me see their second album work, and then I'll be willing to buy their third.
There you go. And a lot of people, I think,
that makes sense.
Yeah, it does. I think a lot of people are just worried that they might be like the new Trade Desk, right? Like this is their legacy business. They'll grow it out for a little while until like one day Amazon, Meta, or Google will just like come along and just lop their head off. I don't know if that's going to be the case or if they have the ability to do that, but it is actually an interesting name right now. Another one that I think is interesting. The fundamentals are sort of catching up to it a little bit here. Is Fix. So this has been one that I've been looking at for a few years now. And they have traded down a little bit. You can see the compression here from 56 all the way down to 39. If we do forward, might be a little bit more favorable. Yeah, 30. So you've had a lot of multiple expansion, but like this is the same forward PE as what it was in December of 2024. Now, one of the reasons that I did end up making a sell decision and why I'm not immediately hopping back into this is because of the data center moratorium, Luddite populism bullshit that's been going on. It seems like the tide is starting to turn. I think we reached a bottom in terms of how bad the narrative is on that.
I have seen some posts on Facebook that are pro data center, and 2 weeks ago you wouldn't have seen any. And it's difficult for me to tell like how many of these are real people as well, on these that are commenting on these threads, right? So take this all with a grain of salt. What is all I'm saying, right? But it is there. I mean, like the two biggest things that show up on my feed right now are anti-data center, anti-flock camera. So, I mean, that's basically what 99% of my Facebook feed is at this point. with a tiny smattering of things I'm actually interested in.
It's weird how those became like the lightning rod issues. And it doesn't
they're populist. I mean, I think the guys at the compound nailed it. It's like, we don't like you, so don't do your business here. Of tech.
Yeah, I mean, obviously that's a mistake, though.
It's a huge mistake.
The other data,
and then the other thing, because I'm so closely tied to Louisiana, there with the SpaceX announcement, there's a lot of back and forth there now that they're just selling Louisiana to the billionaires. Like, dude, the fact that you could grow up in Louisiana now, you could be a kid growing up in Louisiana and be like, oh, I'm at the center of Meta's data center and SpaceX launches and construction, like in rural Louisiana.
Everyone agrees that Americans should have better jobs in communities where corporations pay more taxes to those local communities. But then when data centers pop up, they're like, oh, not like that. We didn't want it like that. They're like,
oh, yeah. And that's just a company that uses electricity.
It's like, well, there's already an EO in place to make sure that it's behind the meter so that it's not going to impact your electricity prices.
That is freaking stupid.
The EO?
The additional demand on the grid is what causes the utilities to get additional capital to construct more production and do upgrades on the grid. If you force all the private companies, here's what's gonna happen. Okay, Dougie's crystal ball. All right, we already have Dougie's first rule: AI is as bad as it's ever gonna be. Here's Dougie's second rule: if you force the energy companies to operate behind the meter, you are going to end up buying all your electricity from them at their dictated prices and not at the public utility prices.
Right. Because the people
they're gonna be incentivized to develop all the tech on building and generating electricity, and the public utilities are going to be the communist wastelands of
right.
And then because you don't do that, you're going to end up with places that are basically electrically dark, like the Tennessee Valley was. Okay, the whole reason that the Tennessee Valley Authority exists is because rural electrification didn't happen. It's one of the mild weaknesses of capitalism, and that it just wasn't worth it to the power companies that were operating only for profit to go put that last electrical line out at that last farm down the line, right? That family was never going to use enough electricity in the near term, at least, to value building out that one power line extension,
Right.
buried, whatever.
Yeah, it's not a profitable customer.
Right. It's not a profitable customer. There's no margin on that customer, right? Well, over a long enough time period, we've realized, oh, hey, even mom and pop farms can use a lot of electricity now. Okay. So that was a bit faulty, but the fact that all the farms have electricity, maybe Jensen's paradox, the demand is there because the supply was there. That all said, if we force all the good tech and all the big brains and all the investment into behind the meter power generation, then all the rest of us will not benefit from that, and we will be buying our power, or I'll say this, the rich people will be buying their power from the hyperscalers and and the data center companies at heavily discounted prices compared to what people have to buy on their prices from the public utility commissions. Exactly, Martin. People don't know how economics work.
No, they do not.
And people can't read.
Speaking of,
by the way, my friend who just started at ASU in her doctoral program.
Yep.
Part of her job is to be a teacher's assistant. And so she was telling me how, like, the first week, kids don't know how to do fractions.
Oh, boy.
In
college.
University physics.
Tough. And here we are on a Wednesday night talking stocks for fun, looking at numbers just because we're dorks.
Sorry. I'm just ranting because I cannot stress to you guys how bad it is going to get when the rich people, the rich neighborhoods, the wealthy neighborhoods, and the cities who can afford to buy the excess power from the hyperscalers who are generating excess power and get really good at it. And then poor people are going to be forced to pay higher prices from the government public utility commissions that are not competing on price, and they're not incentivized to be efficient in the ways that free markets are.
Well, it's just like how you pay higher taxes in California to get a third of the services, right?
Yeah.
Here's Bloom, by the way. Speaking of power generation, this is one that I've been thinking about adding. I have added Vistra just on the back of Nancy Pelosi, on the back of it's traded down, on the back of product backlog that's for sure coming, on the back of Peter Thiel having this be his second biggest position. But this is Bloom, so a little bit different here. This is kind of more of a pure play into energy. It's
Shout out to our girl Tesla.
Shout out Tesla. We're sitting at a 20 price to sales, and we were asked. I was picking her brain about it earlier. You've got them flipping to positive operating income. You've got revenue going off the scale here. It seems like they could very quickly have a path to like a tens of billions of dollars per year type situation. So even though it has made a big move already, and I don't like buying a hardware or a utility at 20 price to sales, it seems like this could be maybe an opportunity. I mean, the better opportunity was when Leopold got flushed and it went down to 170. That was the better opportunity, but it's still at what, 220? 220, right?
Yeah.
Yeah, 220. And it got some of the move after hours because of the earnings, 227. So this is another name that I'm watching. I think this has a better growth runway than something like App. Just seems like they're a bit like sooner in the hockey stick up. Whereas
look at what all of the big investors are doing. I mean, look at your boy Ackman. They're buying energy. They're not trying to buy AI. They're buying energy.
Did you mean Teal?
Teal, Ackman, Druckenmiller. They're buying energy.
I wanted to pull up the Peter Thiel 13F because the energy part was very interesting about it. No, that's not it. Here it is. All right. This is the Teal 13F. 28% Amazon. Everything else is power. There it is. That's it. That's the whole whole portfolio. 20% Amazon. Everything else is power.
I'm tempted to do that.
These are pretty evenly spread bets too. Other than these first two, like 10%, 10%, 9.5, 9.5. Those are very these are not conviction bets. These are he is picking energy winners and he's diversifying across them. Then you've got two bigger, one here, Vistra at 14%, and then Vista, based out of Mexico, operates also in Argentina at 18%. So I want to do more research on Vistra for sure. What are your thoughts?
Yeah, like I probably would do way worse than to just align myself with Peter Thiel's entire port. The previous holdings that he had all worked out for me relatively well.
Now, if I understand correctly, this is not all of his money, right? He has more money invested than this.
Oh, yeah.
So does he have like money in trust that he doesn't have to file, or like what?
I have no idea what his finances look like.
Because this is, if I'm doing some math correctly.
I mean, if he's just private if he's privately investing his own money, he doesn't have to report it, right?
I mean, he has to report it for some reason. Otherwise, we wouldn't.
I mean, he has to report it to the IRS, but he doesn't report it publicly because he doesn't have any clients. I don't know what the rules are there. You are far more educated on that than I am.
It's a good question. I am curious now. It says yes, primarily because of his role as an institutional fund manager and corporate insider.
Okay.
Teal Marco LLC. Okay. This isn't all just his money. This is not his piggy bank. This is the fund that he runs. Any institutional investment manager exercising discretion over 100 million has to file 13F. So that's the rule.
All right.
But no,
so institutional over 100 million has to file. Okay.
Yes, like if this was all his money, he would not have to file. So that's why we're not seeing the rest of his money, because he doesn't have to disclose it. So we're getting what he has his fund in, not what he has his money in, if that makes sense.
Right.
But yeah, Pelosi's in Vistra as well. She's got some call options. Another one, Nancy's in Bloom. She bought some Bloom, and she's also in another one that you wanted to talk about.
Okay. I'm buying Bloom right now. Okay.
Well, you wanted to talk. I was trying to transition over to Uber because you wanted to talk Uber options, right?
Yes, I did.
Are you just liking how low the IV is on it, or what?
I'm looking at some leaps, some ITM leaps.
I've got you pulled up here, so don't show us anything you're not trying to.
Okay. So let's look at basically a year out, September. And like, what was the recent low? Like 71-ish, right?
No, more like 62.
62? Okay. So if we come in at, say, 65, like our break even is 88 in a year.
Right.
That feels pretty safe, yeah?
The upside's not that crazy, though, too, because like it's already $13 in the money.
Yeah, but leverage, bro.
Yeah, you're going to get paid more than owning shares. Yeah, I understand.
But leverage. So
what about like the 85 or like the $100 strike, though? What about those?
Okay, so let me just put a number on here. So here's your, so if Uber closes today, you lose 48. Break evens at 88, but your profit starts going up pretty rapidly because you can control a lot of shares.
Right.
But
shares would probably be, if it gets to like $95, shares in these contracts would probably make about the same money, right? Like around 95, and then probably anything above 95. Is that about how the math would work out?
Well, no, because you're getting 100. You're getting 100 shares, controlling 100 shares at 60, which was lower than I was looking at earlier. I was looking at 70. You're controlling 100 shares for $1,900.
Yeah, but if the stock only moves up like 15% over the next 2 years, you're gonna make more on shares.
Oh, well, if the stock moves up 15% in the next 2 years, it's probably behind SPY and you made a terrible trade if you went into a single stock. Plus,
there's less risk.
Plus, all you smart guys are telling me that Uber is terribly undervalued. And so if it can't move in a year and start recognizing that in a year or 2 years, then
I don't think
not horrible. Then it's then you're stuck in PayPal. And
no. It could just be a battleground stock for like a year and a half. It could trade sideways, and like the thesis could.
Which is why you buy ITM options, and you basically end with, you limit your loss.
Yeah, I don't know. I don't want to get. I want more downside if I'm going to lever up, right? I want $60 again if I'm going to add leverage, because I just feel like it could float between 75 and 95 for a year and a half, 2 years. Like
that's why you buy ITM. So I mean, you're not getting near as much like if you dude at 100, like
that's what I'm saying. Like if the stock goes down to like $62 or something again. Yeah. Like I would
look. I've got 128K to put in here, right? So like, if I bought $100 calls, like I start talking about making near $250,000 if the stock price goes to 125.
And what was the break even on that?
Break even on that is 107. Yeah, but that's $100 strike price. So buy ITM, buy in the money, so your options are less likely to expire worthless. So so if the stock doesn't move in a year, you still have some value on the contract,
right?
So it is far less likely to go to zero versus buying out of the money.
Right.
So, and this is the Nancy Pelosi strategy too. Buy in the money contracts.
She has the $50 strike, right?
I don't know what she has.
I,
Yeah, so look, but there's the $50 strike. So $50 plus 34.40, so the break even is 84.40. Like you're telling me it's not going to be above 84.40 in a year from 78 right now?
I mean, look, here's the thing. I would love if Uber got to $120 in the next 52 weeks. I just don't know when that's going to happen, right? Like we don't get to control when Mr. Market gives this thing a multiple and re-rates it. I think that could be 3 days from now, 3 months from now. It could be 3 years from now. That's the issue. And I just want to have shares so that I know I'm going to get paid when it happens. I just don't know when. I'm probably not maximizing my profit here. There's probably a better way to trade it. And
Yeah.
tee it
So
up.
let's go back and I mean, just the year out. You said she had $50.
Yeah, I thought she had the March of 27 though. I thought that was the date.
Oh, March of 27. Okay, that'll be cheaper.
$80 break even. So it's basically already there.
Yeah. And let's put the price range on it. So let's say a true breakout would be 120, right?
Right.
So it's a 52% gain.
Yeah, you basically start doubling your money around that $110 price. And if you get to $100, you make 65%. To get to $100 by March, it's possible.
Yeah, so $100 by March, 62% win.
And look, if it struggles, can you scroll down? Like let's say it struggles and it just like chops around $65, then you lose half of your money about.
Yeah.
It's not bad risk reward. It's just I need some more courage, Dougie.
Well, if you're in a taxable account, you could also put it into a spread, and so you could sell all this theta back. Right? Like, I mean, I'm talking about buying in my 401k here, but if you really, really wanted to see what that would look like.
Yeah, it's credit spread. You had it right the first time.
Okay. So by the March, you said?
Do January 28th for this one. Give it a little more time.
All right. Still basically the same price almost. And then you sell. So what do you want to sell? Just sell the one. It only goes to 115.
Okay. Yeah, sell the 115 because like that's when you would want to exit the trade anyways because it's made the move.
Yeah.
That's a really wide spread though.
That's a huge spread. Like you're not getting much of your theta.
What if you did like 70 to 90?
I get that right?
Yeah. Yeah. Oh no, the dates are different. Your $90 call is March.
Oh, yeah. Sorry. Good catch.
Because it feels like $70 is supported, right? Like that's where value investors start stepping in. So your max payout here is $2,000. How much are we paying for this option?
You're paying $1,200 for the option.
Okay.
Or, no. Okay. So it is the net spread. You're paying.
Okay. And then
the max $9 a share.
$2,000, which is the spread between the 70 and the 90. So maximum you can double your money, and you're paying $1,000 to do it. I don't know if that makes as much sense as the leap.
I don't like that as much as just the ITM. And
I agree.
like it's basically shares. Like you're getting so much delta. It's basically shares.
Can you pull up the just as far out as you can go? Do like $90. Break even is going to be 108
ish. Yeah.
So if you're really expecting a big re-rating in like uber bull case,
yeah. So it's going to perform slightly worse. I mean, look, it's going to perform slightly worse than shares, but you buy so like that's your other thing, right? So how much do you have to spend?
well, we could just keep it
say
one
you say you're
contract.
Dougie and you've got $100,000 to spend. Okay. And you can exit earlier for more money if it gets that high.
Yeah, so what I'm thinking is like it could end up in that $100 range within the next year, and then you could still cash out for that 70, 80, 90%. Yeah, somewhere in that section.
Yeah. Well, I mean, what I like to do is just is at 100 cash out half and then let the other half ride.
Yeah, you can do that too. Not investment advice, of course.
Not investment advice. Yeah.
We're just looking at a calculator here.
But Uber, so smart people are starting to talk about Uber as a value play. And so I'm saying, well, if it's going to turn around in a year or a year and a half, a little less than a year and a half, if you go December 28, yeah, like get in on that 55 action. Like you can get 30 contracts, right? That's 3,000 shares.
That's about a $92 break even for those.
Yeah.
You can't see the screen there, but yeah, this is a year and a half out basically.
Yep. So if it runs to 100 in September of next year, like you've got a 40% win. Like,
yeah, that's basically a year from now.
Yeah.
And you're not taking as much risk there. I mean, it would have to trade sideways. If you scroll down there, like everyone always looks at the green part, which is the fun part.
Yeah, if it just trades sideways, if you end up in 15 months, whatever it is from now.
Yeah, if you're just wrong, you don't get hurt that bad unless you're really wrong. Right? Like
yeah, you basically you give away, you've lost your time value.
Yeah. Yeah, so what we're seeing here, so like if it was at $70 for the next year and a half, you would lose a little over half of your money, which is pretty brutal. But you should know that before you get there. You should know that
you'll be feeling the pain right around. Trust me, you'll be feeling the pain here.
Right. And then at that point,
you'll be looking to exit or double down.
One of the two. Either you're correct and the market's wrong and you're going to double down, or you're going to realize that you're like, oh shit, I'm wrong.
Yeah. And what you really should do if you wanted to consider something like this is wait until Dougie says that he's had enough and he's sold. But yeah, so this is something that I was looking at getting into. So I'm gonna hit up some of the Dougie's board of directors and ask them what they think about putting on a 6-figure play on some deep in the money calls on Uber. I don't know if I'll do it yet, but
So again, the thesis here, we can break it down for those who haven't seen it or like aren't following me on Twitter. The idea is you have a really, really strong core business, half international, half delivery. The delivery business is quickly becoming half of their adjusted EBITDA. You have growth there. Delivery is growing 25, 30%. It's going to continue to grow 20% plus for quite some time. People are going to continue to buy their time back and convenience and just pure laziness and convenience as well. And then the mobility section, the AV disruption has been talked about a lot, but it's simply not happening in the pace that you need it. I cranked some numbers earlier today. Waymo could literally 5x their riders or 5x their number of rides given over the next 3 years. Okay, and I think that would be like Waymo would call that a success if they 5x their ridership over the next 3 years. Would you agree?
Yeah.
So if that would be the case, then Waymo would be giving about 130 million rides a year. That is still 117 times smaller than the current size of Uber. So we're talking about two companies that are just at completely different sizes of scale, that like Waymo would have to 30x their business for it to actually, and all those rides would have to be taken away from Uber one-to-one for it to actually become a large issue for their mobility business. They're also partnering with autonomous ride like fleets as well. So companies like Neuro, AV Ride, Wave, Baidu, Pony AI, all across the world. They're launching 15. They've already got 7, and they're going to launch 8 more. So it's going to be 15 by the end of the year that are launched across, 4 different continents. So these fleet operators are going to want high utilization on their expensive CapEx intensive items. If you're Pony AI, like you want your car to be used as much as possible. There's flexible demand within rideshare, right? There's peaks in the morning, peaks at night, but particularly on Friday night, Saturday night. So you have variable demand. So if you had enough cars to handle the demand all hours of the week, you're going to end up with too many cars that are just sitting around depreciating, not doing anything, which is why Uber's so powerful, because you're able to pull people's cars onto the platform for just a few hours because they're personal vehicles, and they essentially just lease that car for a few hours on Friday night, on Saturday night. If the fleet operator had too many cars, you're going to have depreciation. If they did not have enough cars, they're not going to make their customers happy, because then on Friday and Saturday night, prices are too high. There's really big wait times. There's lead time. Like, it's just not going to be good. So customers are going to continue to want low wait time, because time is money, and also just cheap pricing, right? I was downtown Phoenix a few weeks back, and it was triple the price for a Waymo because they're more in demand. So people are continuing to use Uber. Like, that shows you how supply constrained it actually is, that if like consumers prefer the AV, that it's triple the price because they literally cannot build them fast enough. And you even just look at them getting into new markets. What do you mean new markets? They don't even have enough cars to service the existing ones. Like, that's how big of a company Uber is. They did 15 billion trips over the last 12 months. They added more trips quarter over quarter than Waymo has ever given. I'm going to say that again.
Yeah.
Uber quarter over quarter added more trips than Waymo has ever given.
Than Waymo's entire existence. Yeah, that's amazing. I mean, I don't think they're a bad business. I'm not 1,000% that this is where I want to put my capital.
Sure, but and it's definitely one of those situations that you watch the basket very closely, right?
Yeah,
it's a contrarian bet.
So let's take the next evolution then on this. On taking a look at this trade. All right, pull up, share my screen. Okay, so let's just look at the fib levels here that are important. Man, look at this, like, revealed levels on the way up. Like, look at these, like, perfect bounces on the what would become the technicals on the run. Isn't that just crazy? So this is the extension, so we'll hide that for now. But this was the last run up to the top. So you're sitting right here at another, resistance level. Previous resistance, previous heavy resistance, rejected, broke through, came down. We're testing it again.
It tested it a few times. It really wanted to break through 80. If you can zoom in on a daily or a weekly, you'll see it over the last week or so really bounce off a few times.
Yep. So here then is the, let me go back. Okay, so this is what's called the extension. So this is the fib tool to look at futures or future items. Okay, so it takes the previous run, and then you draw down on the retracement. Okay, so if you think the bottom is in, oh, and by the way, look, it is just bouncing off the 200 SMA.
What's that Charlie Munger quote? If you just bought quality companies at the 200-day SMA, you'd outperform the S&P.
Yeah. Well, I mean, if you right when it touched right there, that would have been a good, and that's when you were talking about it. It never
that was
below.
That was the Waymo breakup announcement that they're not going to continue their partnership in Phoenix.
Yeah.
It
never quite got below that. But it for all goods and purposes, it touched it in a fuzzy level, right? It might not be the SMA, it might have been the EMA or other ways to calculate moving averages. But so if we want to just ride this up to the 618 level, because we know how often that takes place, right? I think you've at least, from the TA that I've been showing in our chats previously, you've at least come to understand why I find the 618 levels interesting.
Right.
I don't know if you believe in them, but you're at least right? Is that?
Yeah. It's I'm intrigued that it's potentially a law of nature.
Yeah. It's okay. I'll take a look at it. Okay, so let's put a line there. All right. So 115.89. Let's go back and look at our trade. 115-ish would be just let's say January 28.
Is this the part where I say if my conviction and research level are super high that I can just buy monthlies and I'll be all right? We're trying to make money, are we not?
Yeah, we are. So here you go, bro. So here you go. On that trade, if it hits, and I'm just extrapolating the distance. Okay. So let's say, okay, it's more like November of 28.
But at this point,
okay, let me share. Let's share this. When I hit the share this tab instead, is it switching the tabs? Okay.
Yeah, we're looking at the TA chart now.
If we just kind of roll this out, follow this trend, we'll be right around here, right? I think I had November. Okay. Called November-ish 28.
Okay.
So we'll go back to sharing our option screen.
This is
115.
This is kind of just how we drew it up, right?
Yeah.
This is, yeah.
So we would be looking at numbers in this level. This would be a 70%-ish win.
And if it trades sideways, you lose 20%.
Yeah.
Now, one thing that we haven't talked about in this calculator, guys, there's a limitation to the calculator here. It's the IV change. the IV can change. Like you can have IV crush.
Yes.
So
But it can also go the other way around, where
Correct.
if things get more volatile, the option could cost more later just because the VIX is high, right?
The longer the option is, the more what we just said is important. If you're buying leaps and all the IV goes away and it's out of the money leaps, you're gonna have a bad time.
Yeah, but these are in the money leaps.
These are in the money. Yeah.
These are deep in the money. These are $55.
Yeah, so you'll have less to worry about with the IV, but I did want to point that out because it is a limitation of this calculator that you should be aware of. There's even at the top left, if you guys want to use this website, there is an IV change. Right now it says plus 0%. Wait, no, scroll down. Just above the chart to the top left.
Oh,
yep.
Yeah.
So you can even, there's a drop down there that if you want to calculate in some added IV change, one direction or the other, it will recalculate the entire chart for you using that. So say the IV goes up, 10%, something like that, 11%?
Yeah. Yeah. If the stock is running, like, bro, you're probably at plus 10%, right?
Okay, and then hit calculate again. Yeah. So it didn't do that much to it because it's in the money.
No. Yeah. You got a little bit more hit to it. But yeah, if the stock just trades sideways for 2 years, you'll lose IV on it, right? If you try to exit it. But if the stock runs, if it has a run in it, which you guys seem to be predicting it's going to do, and I'm borrowing some conviction here on the company, but what I'm trying to do is put together an educated trade and just kind of walk the audience through, not financial advice, how I take a look at and evaluate trades so I understand what I'm buying when I'm buying it.
Right. And you're measuring the risk reward, right? So like the example we looked at, you're getting 70% upside if the trade plays the way that you think it is. And, even if it doesn't go perfectly and you're in the $90 to $100 range, you're still making good money. If you trade sideways, you're down, somewhere between 17 and 25%.
So what I could say, Austin, is my plan is that I think that we're going to go to 115.89 in November or December of 2028. We'll call December the drop dead date, right? And I'll get a 70-ish% win. So the plan is to exit at 70%. And if we trade sideways, I lose 13.
Right. Now,
And
here's the thing.
77 over 13? 5 to 1-ish? 6 to 1-ish?
Now, here's the thing. Here's why I still own shares. And I've made this point a few times, but I'm going to continue making it. I don't know when the move is going to happen, right? Like, you don't know when the narrative is going to flip. But the key signs that you do have is David Tepper. He's not exactly known for like holding he has high portfolio turnover. And he's done very well with that strategy. So he usually is able to catch good momentum. And then you also have Pelosi with the March of next year options. So those expire, within, what is that, 7 months now?
Yeah. But here's the thing, right? If you buy shares today, you're getting and it goes to 114, you've got a 42% win. If I did my math right.
Yeah, so obviously you're not making as much with shares,
right? So you get leverage. So you get a 40% win. You also, so with the option, you get a 70% win. Plus, I got to buy more. So not only do I get a higher percentage, I also got to control 3,000 share or 5,000 shares, whatever the number is going to be, right? So I get 77% on, let's see, okay. So let's say I have 100,000 for the trade, right? So divided by 81. Sorry, I'm using a calculator right now. So I get 1,200, 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, 9 shares. A 1, 2, 3, 4, 5 point, a 1, 2, 3, 4 plus 0.5679 shares. That's a number. So 1,234 shares. Do you have a spreadsheet up? You can put this in, or just write it in the doc real quick.
Okay. What's our number? 9 point.
If you bought shares for $100,000 at 81, which is the current ish price, right? 1,234 shares.
Okay.
Times 81. So you get a 42% win on that. Yeah.
Okay.
Right.
Versus the 70% if you
versus
had the
versus the 70% on what's the cost of those shares?
The 1,234 shares?
Nope. I would be, because I'm buying options.
So 1,234 shares is just under $100,000.
Yep. So I would get 2,700 shares.
Right.
Okay. If I use the option, I get 2,700 shares and I get 77%, or call it 70%.
Yeah. Or potentially more. Look, if the thing re-rates to like 110 tomorrow, like look at some of like the ones that are like later half of this year. Yeah, so like if it re-rates to 110, 108.
Oh yeah, if we have a fall run, if we just have a fall bull market and the whole market goes nuts, and then we have a Santa Claus rally.
But as B. Martin points out here, you could also have a black swan. And then, like, if the NASDAQ drops by 20%, you're immediately in the hole by 35, 40, 45%.
You could always have a black swan.
Yeah.
And if you are trading options, and your reason not to trade, to enter a trade is because there could be a black swan, then you will never enter a single trade ever. If that's always your reason not to enter a trade, could be a black swan.
Or maybe you just don't like the macro setup, right? Like a lot of times I find myself buying options and not holding them super long because something in the macro is kind of like, how much risk do I really need to have on right now? Can't I just own shares? That's kind of like my default option is shares.
Yeah, well, you get one delta.
Yeah. Here's the fundamental.
But anyway, so this whole thing has been about, I guess, like how Dougie likes to evaluate an options trade on a in the money call option prior to entry. I'm not saying I'm going to do this. This is not financial advice, but this is one that's been attractive. It's a stock Austin's been tracking and buying, and other super investors are also getting quite bullish on Uber.
Look how ridiculous this is. This is EBIT over the enterprise value over EBIT. So almost pretty similar to, like, think of it as EPS versus forward or PE. Right. So you have the earnings before interest and taxes just going up and to the right, and what I can only describe as like an absolutely beautiful line. And then you have the price just compressing. The business is getting more and more profitable, and it's now down to 25 EV to EBIT.
Yeah. I understand that, and that's why I'm looking at this trade, right?
Right.
What I don't have a handle for and I feel like somebody like Hollis could have a lot to say about something like this topic as well, is how much, or especially Amit, is how much the market is now driven by narratives. And
I mean, a lot, right? Like, look at SpaceX and Tesla, right?
Yep. And so one of the anecdotes we have about narrative-driven markets is narratives matter during a bull market and not at all during a bear market. So what you've got in Uber is the narrative is against you. So in my mind, now that I'm really kind of thinking about this, and check me if this doesn't make sense. If the narratives matter during the bull market, and the narrative is Waymo and Cybercab are going to eat Uber's lunch.
Yeah, 1P.
Right. So you can't own Uber because it's going to zero because everybody else is coming in. But
Which
we know from the numbers you just posted,
only a quarter of their business. Only a quarter of their business.
But we know from the numbers you just showed us that is not the case. The only thing that's happening is the price is getting low. So when Uber and Waymo, or not when Uber, when Tesla and Waymo lose the value of their narrative in the next bear market, it seems like Uber will be a direct beneficiary.
Yes.
Does that make sense?
It does. The other thing that I think about too, and how it balances out my portfolio, is if the AI trade and CapEx just kind of unravels a little bit and people want flight to safety and they want companies that are asset light and cash flow, Uber, right? MasterCard, Visa, FICO, like companies that just spit out free cash flow.
So Uber sounds like a nice hedge to your AI position.
Yeah, they complement each other.
But I don't think I want to enter a six-figure options position as a hedge.
Well, who said it needs to be six figures, and who says
that's me? That's
yeah.
me. That's what I'm shopping for right now, is a six-figure position.
Well, who says it has to be one position, right? Like there's
me, because I have to have concentration.
Okay, but
like I can't do this with six companies.
But if the purpose is to hedge, then maybe you don't buy an option, right?
Or maybe you buy out of the money. Maybe you buy a few out of the money options. Maybe you buy 20 grand worth of out of the money options.
That are just like home run hitters.
Yeah, and so if the whole thing goes to crap, well, they'll look for who's got free cash flow and who's undervalued,
right?
Based on that free cash flow, and that'll be the Ubers of the world.
I feel like there's support here, based on what I've researched. I don't see a value trap, but I could see it trading sideways. That's kind of like why I think the floor is basically here. Now that like you're starting to get really smart people doing research on it, stepping in, buyers. Even Sam is in this. Sam Solid.
Yeah.
And he's like a very much like AI pilled guy, right? Like he's in Nebius, he's in all these names that are very growth oriented. And I would not call him like a self-driving bear. Doesn't he have a Tesla too?
Sam? I don't know. Wouldn't surprise me in the least bit.
I mean, he's in Southern California, so he's
Southern California, Indian. Yeah, checked all the boxes. He owns a Tesla.
No, he's Egyptian.
Yeah. Okay. Yeah, it's true. You're right. Egyptian, not Indian. That said, same box checked.
You're like, I got it wrong, but not. I wasn't too far off.
Right. Yeah. So with apologies to Sam and his whole, lineage and background.
Now you have to apologize to the whole family. Thank him for the
and apologies to his entire family.
Say thank you. Have you said
and
thank
culture. But yeah, the Egyptians do love themselves some Teslas as well. Dude, my high school chemistry teacher was Egyptian, and that dude was the coolest old guy with the heavy accent.
his wife was a VP at Glaxo, and he taught high school because he didn't want to get bored. His wedding ring had 24 stones from the Great Pyramid in it.
What the heck?
Like, bro was old school Egyptian. I'm
Yeah,
just like, that is the flex of all flexes right there. Because I'm sure, like, if you tried to do that nowadays, like, you're probably going to Interpol jail.
Right. Yeah, that's probably not even something that you can buy at auction, right? Like you have to be given permission by somebody, probably, right?
Yeah.
Like buying a Ferrari, they have to let you into the club.
Right.
What else did we have in here? Oh, some other possible value plays. I haven't looked into the numbers that much, but Domino's, it seems to be getting hit pretty hard, even though like they've had slowing growth over the last few years, but Domino's feels like another value play that could be good. I know Berkshire owns some value play. Another one, we've talked about it a little bit, Copart, the people who own the
Copart. Yeah, somebody got that in a stock draft and then was like, nah, I'm out.
I jumped out of it because I was like, this is not going to do what I need it to do to catch all these crazy people. I saw what everyone else had picked, and I'm like, oh my gosh, this isn't going to get it done. Everyone else was picking like micro caps and triple leveraged memory. So I was like, okay, I guess I'll trade out the Copart. Oh, we should pull up the stock draft too for
oh yeah, we should.
Just to do a where's everyone at sort of thing here. We already talked about Vistra, so those are like my 3 possible value plays that I was looking at. Not that I am a value investor, but I think those are interesting. Yeah, let me pull up.
Hollis, DM me, man. I need to talk to you more about what you actually do.
Yeah, he tried to explain it to me once in LA, and I was like, I'm not smart enough to understand what you said.
Well, in Chicago, like it was just me and him, but I had probably already had either too many Celsius and was ADD, or I'd already had too much whiskey and couldn't follow anymore. One of the two.
Here is the stock draft. Mr. Hollis is our leader. Pretty significantly, too, I would say, right?
Yeah.
Solid 5% up in pole position. I talked a little bit shit to Selena.
Oh, when did I get to number 4? All right. Okay.
I don't know. I passed Selena at one point earlier this week, though, and I started talking shit, and I immediately.
Yeah, and that.
What do you have going on here?
I've got
you're gonna have a good day tomorrow.
Yeah, I should pop well tomorrow with NVIDIA.
Palantir as well.
Qubits dumped again today. Also Robinhood coming back from the dead has not, like, I haven't got back to like making money on that trade, but I'm at least no longer down like 50% on it.
Right. Yeah, because Hood closed at what, like 108, something like that?
Yeah.
When you said this in the draft, Hoog, I was like, what the hell are you talking about? I don't know the names of all the double leveraged. I can't believe you picked SPY, dude. That still cracks me up.
It's green. It's green.
It is green.
There's a lot of people, with apologies to June, who would just love to see some green.
Yeah, let's take a look under the hood here. Yeah, I mean, it's 3 big names. Rocket Lab, I don't know if it'll stay down this low at 60.
Dude,
67.
what is the news on Rocket Lab?
They delayed Neutron, but like that moment's gonna happen.
They got like merger-ish news. Like news.
Did you see what her best pick is? Selena's? It's Toast. She traded on the first night, the very first night. Remember?
Yeah.
She didn't even hold whatever it was. She got rid of it right away and sold it for Toast. And that's been her best winner. MasterCard's done well.
I saw something today that was like Rocket Lab is doing a merger.
But again, I was 3 drinks in already, so y'all might be like, "Yeah, Dougie, this was like news from a month ago."
Are you talking about Iridium?
Yes,
Yeah, that was announced at the end of June.
that's what I thought. Okay, then why was it on my feed today? Because I was looking at it, I was like, "Huh, I thought they just did a like major acquisition / merger." No,
Yeah, I don't see any news from today.
sorry, folks. There's nothing worse than an old news feed
Just
paired
recycled.
with a little bit of bourbon.
I know we had a few more items. We can actually push that to next week.
Yeah.
We ready to sign out?
Sorry, I did my thing actually, which is basically half of what I wanted to talk about there, but we did it all with the Uber options play.
Yeah, but we can save this for we can go deeper into that.
Yep. Yeah.
Yeah,
It's 11:30. We've got to.
Yeah.
Okay.
All right, we're gonna get out of here, everyone. Thanks everyone for joining. Hope everyone has been having a good week, and we'll have another good show next week. We'll be back again, and we have a very exciting topic that we're gonna dig into. So next week should be super good. Thanks for joining. Bye, everybody.
Bye, everyone.